Today is the 29th of September 2010, and gold has been quite bullish, not only over the last year or so, but over the last 10 years, as the price has went from the bottom of around 250, now rising past 1300 per ounce. And it's in a solid uptrend, and I really emphasize the word solid. This trend line, it's not even in question to be support anytime soon. And the trend line that has connected the last half decade or so has stayed intact with the exception of this very small pierce below it. They call that pattern a trap, a failed move. And often from failed moves, can create fast moves, they say. So there's the failed move going below this support level, not staying in a neutral side or even going down to 5. No, instead it has a fast move to 1300 right now, but there is also no signs of this rally dying off. We also can make a case for this trend line in here, which, well, we're right at it again, which connects this high with a pierce, this high, and if you connect even that high too, you could probably make that trend line work. Let me see if we can connect it in there. Yep, something like that. So when you look at this and maybe you put in a little line like this, you have a little pattern with a wedge. It needs to break out to one side or to the other. And if we want to see the big moves in gold going to 5,000, 4,000, and some even say maybe 7 to 10,000, then what's going to happen is many of these uptrend lines, the resistance part of them, has to be taken out to the upside. And when those occur, you are either going to get a move like this, which would be the more common situation where it goes above it and stabilizes and maybe goes back below it, or you have that of a major breakout to the upside. Now what we're going to do is take a look at gold, but on only over the last couple of years. And this trend line was very interesting because it was taken out in the earlier part of this year. It found support where we previously encountered a level of resistance. This resistance here became support in here. And since that point, it has been on a massive rally towards the upside. And there's really no denying the bullishness when you are at all-time nominal highs and there is no downtrend lines, there are no declining moving averages, even though there are no moving averages on the screen. You have clear bullish action. This is a support level that, well, it's not really even in that much question. If we connect these tops the best we can, we would get an area like this, which has this top, a pierce above this level, and now it's coming up to the top part of this range. So therefore, as far as pullbacks are concerned, would it be that much of a surprise to come back and find support at previous resistance? If that's the case, then you'd be looking at 1260. The trend is still higher. As long as it keeps going to the upside, then it will continuously be oversold on the overbought on the short-term time frame, and a correction would still be needed. But as long as the trend is higher, if you short in any way, you are fighting against the current trend, which is that of going higher. Now, as far as the gold to silver ratio is concerned, It's an interesting pattern that we are developing. This would be a clear downtrend, and the uptrend is now being tested. We'll just have to say it some more clearly at this level here. So right now, this trend line is a shade below 60. In early trading session today, silver managed to get over $22 an ounce, and thus that brought the gold to silver ratio a little under 60. But it's in this little pattern, in this symmetrical shape kind of format, and it's going to have to give to either one side or to the other, as the end of this pattern is really coming into tuition. And when you draw a line down towards here, that would really take you into 2011. So therefore, excuse me, therefore we if well, let's just put it this way: if gold goes higher and silver goes higher, then this ratio should more than likely be going lower. Where if they sell off, we have both gold and silver selling off, then most likely it should be going towards the upside. And that happened in 2008, when we seen gold going from 1,000 to 700 and silver from 22 down to about 8. We've seen this massive rise in 2008. And this is the same chart, but over the last couple years or so. And this level of resistance that we had was pretty much the support from this level here. So support acted as resistance. So this support was resistance that it pierced above, that it had a smaller pierce above, and it had one minuscule pierce, but really was a level of resistance. And now it's coming down to this area of support here, roughly around the 60 area, which was support in this area in here. And breaking below that level there should probably bring us down towards the 50, 52-ish area. And if that's the case, check to see if the former support becomes resistance, like it was the case back at the 70 area. So thank you for watching this video, and have yourself a magnificent day. Bye-bye.